Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. U.S. futures edged higher as the recent selling pressure tied to artificial intelligence stabilizes for now, and U.K. inflation expected to fall this morning as a boost to the Bank of England. The United States and Iran make cautious progress in nuclear talks in Geneva. Tehran plans to return with a proposal in 2 weeks' time. Plus, police talks between Russia and Ukraine continue today after President Volodymyr Zelenskiy tasks his negotiators with discussing the future of its occupied nuclear power plant. Those are the top stories that we're watching this morning. In terms of the markets, here is how things are shaping up this morning. S&P futures up about 1/5% this morning. 68.73 is what we're looking at this morning going into the opening trade here in the United States. For NASDAQ futures up about the same, about 1/4% after we saw sort of that sell-off last week, sort of abating into this weekend. Gold catching a little bit of a bid today, still below that 5,000 level that we saw earlier in the week, but now gaining about 1% this morning. We also are watching UK CPI, all important, coming out in about 1 hour's time, in addition to earnings from Glencore that will be dropping after BHP and Antofagasta that we got yesterday, and of course the all important Fed minutes, 7 p.m. tonight. Let's get started. So U.S. futures trading higher this morning. That's after stocks on Wall Street whipsawed yesterday as traders continued to struggle to assess the outlook for artificial intelligence. Some Fed officials have begun suggesting in recent days that productivity growth from AI could mean higher rates. Here's San Francisco's Fed President, Mary Daly.
What we're looking for is a technology to give us consistently good changes in productivity so that all industries at scale get better. Industries figure out new ways to generate revenue, new ways to do product design, new ideas to come and shape the economy. That's the thing that has a sustained productivity growth part. So it's undeniable productivity growth has gone up. What's not as clear is how long will that last.
So as the AI narrative evolves once again, let's bring in Mark Cranfield, Bloomberg Markets Live cross-asset strategist. Now, Mark, listen, let's talk about sort of the AI rotation theme. How much can we expect this to be an active conversations in stocks this week? And again, potentially looking at these Fed minutes, how much of an active conversation is it for the Fed?
Well, the AI conversation for central banks around the world is probably going to extend for months into the future. There's not going to be any end to that. In the short term, as far as US markets are concerned, it's still probably the hottest topic that they have to deal with. And you can see that a lot of these major companies, the ones are so-called magnificent tech stocks, they've all been struggling a little bit recently because people are getting used to the idea that they've made huge investments. They have huge commitments to invest even further, particularly in things like data centers. And yet we're seeing weakness in places like software, in logistics, in people who advise for private banking or wealth banking. All of this is coming together to suggest that maybe this AI story has seen the best days already, and now where is the fallout going to go? Now, investors are already starting to move their chips around, and they've taken some of it away from the Mega 7 names, and we haven't had NVIDIA yet. We've still got a week to go before their quarterly earnings. It's going to be a very nervous period for investors who are very exposed to the tech sector. On top of that, our colleague in New York, Cameron Price, was writing about the risks of seasonality. The second half of February, for many, many years, has traditionally been pretty bad for the S&P 500 and for the major stocks. All kinds of reasons why that's the case, but because it has been happening so often, people again will be looking cautiously into this period. We're now into that second half, and it will really need something very big to make people more optimistic. And when you hear people like the Fed's daily there saying and speaking more cautiously, that isn't going to help sentiment in terms of equities. So unless something really surprisingly bright comes out over the next couple of days, it's going to be a very nervous run-in until we hear from NVIDIA next week.
Well, something that central bankers have a lot more experience forecasting is, of course, CPI data. How nervous do you think the BOE is? We're expecting UK inflation to come down to 3%. How confident are you on that glide path down to 2%?
Well, you can see from the way that the market is pricing that it's a very big number that we're dealing with today. Surprisingly, the Bank of England narrowly didn't cut interest rates at the previous meeting. It was a 5-4 decision, and it looked as though they were very close to actually reducing by 25 basis points. In the end, they held. That's a clear guidance that they intend to lower interest rates at some point. Now, despite that, the market is not fully priced for a rate cut at the March meeting. It is for the April meeting, but not yet for March. But it really does hinge on this CPI report today. If it comes in slightly below expectations, you can imagine that traders will very quickly shift to a full 25 basis points rate cut, and the Bank of England will see that, and we'll probably glide into the March meeting expecting the rate cut to happen. If we get a slightly higher print than is forecast by the market, we will see some volatility. We'll probably see the pound strengthen a bit and gilts fall slightly. But then it will need the explanations from the central bankers. So after that, it'll be very dependent on what the Bank of England message is and how they perceive this CPI report. Do they see it as a blip, or do they see it the beginning of a new trend? So the wording will matter a lot more if we see a high print on inflation rather than a low print. If we see an inline to low print today, people will assume that's it, it's a done deal, the rate cut is coming, and then they'll be interested in whether or not there's going to be a series of cuts or whether it's just one more in the sequence. But certainly the number today, the CPI, is one of the biggest that we've had in recent memory.
Yeah. Well, thank you very much, Mark Cranfield, Bloomberg Markets live cross-asset strategist, sort of teeing us up for those inflation figures out of the United Kingdom in about 54 minutes' time. The United States and Iran have hailed progress in nuclear talks in Geneva, with Tehran's negotiators scheduled to return with a new proposal in 2 weeks' time. Iran says it has reached what it described as a general agreement with the United States on terms of a potential nuclear deal. Joining me now is Bloomberg's Paul Wallace. I want to take a little bit more of that quotation we got from the Iranian foreign minister, Paul, before we sort of get talking here. He says, we were able to reach a general agreement on a set of guiding principles based on which we will proceed from now and move towards drafting a potential proposal. How sort of confident, how much progress actually got made in Geneva?
Hi, it's a big. That's a good question. We haven't had any of the details, and as is reflected from that sort of quote that you read out, it seems a bit wishy-washy at this stage and still very, very vague. And the Americans have said that the next round 3, whenever that happens, is going to be tougher because it will actually involve them getting down to the nitty-gritty and the details. We still don't even know exactly what the parameters of the talks are. The Iranians are effectively saying that these talks only deal with nuclear issues. The Americans are implying that actually they go beyond that, and they do involve discussions about Iran's ballistic missile program and its support for proxies around the Middle East. Maybe there's a way that there's a world in which they're both right and they can both, they're able to square those contradictions and keep each other happy. I think the main thing for now is that these, there clearly was some progress yesterday. The talks haven't collapsed. Broadly, the oil market sees this as a sign that U.S. strikes on Iran are not imminent, that the U.S. is at least going to wait for a few more weeks until and give these talks a real chance. So now we wait for Iran's detailed proposal, or a slightly more detailed proposal to what it spoke about with the Americans yesterday. And yeah, as I said, round 3, whenever that happens, it looks like it won't happen for at least 2 weeks. Round 3 will be probably tougher.
Yeah, I would imagine. And we should say this is coming from a very sort of high bar in terms of making progress. It's going to be very difficult to get any progress in these negotiations. So I think, any sort of dialogue will certainly be closely watched by anybody who's interested in geopolitics, but certainly watched closely by the markets. For the oil markets and everybody who's trading oil today, very serene market action right now on oil, up, a couple of cents here and there. What is the interpretation from the oil market?
So I think broadly, traders have taken what's gone on with the talks so far, the first round in Muscat in Oman and yesterday in Geneva, as a sign that, the US is serious about talks, that Donald Trump does want to try to make them work, that he's not sort of bluffing with these talks, and so oil is down a bit. But it's important to note that we're still up. I think Brent's up 12-13% this year, and that's mostly on these tensions between the US and Iran, and there's still very real prospect of a conflict in this oil-rich and gas-rich region. So markets are still wary of it. And all at the same time, the US has massive firepower in the region now. 2 aircraft carrier groups, second one on its way, a huge amount of aircraft. So, there's a lot of military, US military equipment ready to go if Trump decides to strike.
Yeah, absolutely. Bloomberg's Paul Wallace there, and it must cost quite a pretty penny to keep all of those sort of military naval ships active around in the region. So we'll be watching that very closely. Also watching the talks that were happening in Geneva between the Russians and the Ukrainians are expected to continue today. President Volodymyr Zelenskiy was tasked his negotiators with discussing the future of its occupied nuclear power plant during those talks. Let's bring in Bloomberg's Russia economy government reporter and editor Greg Sullivan. Greg, what more do we know about the future of the Zaporizhzhia nuclear power plant, and what do we take that these conversations are apparently honing in on that rather than other territorial issues?
Well, for one, we've always known that the Zaporizhzhia nuclear power plant was one of the remaining sticking points in the negotiations between the two sides. Russian forces seized that power plant, the largest nuclear power plant in Europe, in the early days of the February 22 invasion, and it's been a source of contention ever since. Obviously, Ukraine relies a lot on nuclear power for its electricity generation, which is more important than ever given the fragility of its energy systems currently. There are also safety issues around it. However, I think it's unfair to characterize it as honing in on that as opposed to other issues, because we do know that they are talking about Moscow's territorial demands for land that it does not control. And that remains the biggest sticking point so far in the negotiations. We know that they are set to talk about it. Last night we heard Ukrainian President Volodymyr Zelenskiy say that the Ukrainian people would not go for just turning over land. So as far as these talks do seem to be continuing, we're not sure what progress is being made because neither the Russian side nor the Ukrainian side seem to be backing off their stances around the issue of this territory.
Well, thanks very much, Greg Sullivan, our Russia economy and government editor there for the latest in those negotiations between the United States, Ukraine, and Russia in Geneva. Still ahead, a high-profile AI summit in India as the technology rattles markets. We speak to Bank of America's president for international, who's at the summit. That's at 6:40 a.m. London time. But first, we'll also discuss India's plans to attract $200 billion in AI investment. That's next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. A top federal minister from India says the country expects to attract more than $200 billion in AI investment over the course of 2 years, underscoring the nation's surging technology ambitions. The country is hosting one of the world's biggest AI summits, and we're going there right now, being joined by Lightspeed and Bank of America's India Accelerates Lightspeed partnership, Bejul, Somaia. Thank you so much for your time this morning, hoping that you can actually cast some light on this debate, this discussion that we've been having on AI. Everybody's become a sort of AI analyst. You have been in this market and looking at this technology for a much longer period of time, saying that all of this is moving so rapidly. But today, Wednesday, February 18th, what is your grand unifying theory of AI and kind of where this technology is going?
Yeah, look, it is moving incredibly rapidly. We've made over 175 investments at this point, over the last 10 years, with that pace accelerating in the last 3 years. And anything I say today, I reserve the right to change my mind in 90 days, given how quickly things are changing and how quickly we're forced to reevaluate our mental models. But what's topical right now, I think, for everyone is that the pace of underlying improvement in the technology, the acceleration is continuing. Perhaps a year ago, there were a lot of folks that believed that scaling laws would not hold, that we would hit a wall in terms of the data that these models can train on. I think we sit here today and we're in awe of what the technology is doing and the slope of the improvement of technology. And that's raising a lot of uncomfortable issues and a lot of important issues that we're all having to confront and discuss.
Well, let's deal with some of those important issues. I mean, we've been talking about the SaaS apocalypse, the Ramageddon, the software industry, the industrial industry is not being spared either. At this sort of point in time, what is your appraisal in terms of what survives and what dies?
Yeah, look, I think often as you find, with market movements like this, and we had one in January of 2025, which was the DeepSeek moment, and that was actually the time that Lightspeed invested $1 billion into Anthropic. So, these are moments of opportunity as well, and our assessment is in the near term things are overdone. But what the market is sensing, and we think correctly, is you really have to ask very clear questions about the durability of the prior generation of software businesses that have been built. Now, that doesn't mean every business is not durable, but it does mean that some are at risk, and we have to start discriminating between which are at risk, which are more durable. How do you distinguish between the two? And I think those are some of the discussions that are happening right now, because the model capabilities are improving so rapidly that really we can't just keep operating as if it's business as usual.
But how do you distinguish between those two? Do you have a clear picture of that now, or do we just basically need to wait for time to go on and basically the market, ahead of time to basically be judge, jury, and executioner on some of these companies?
No, yeah, look, I think we have to have a point of view, and we have to be open to evolving that point of view. So the first thing is, what is the market saying? The market is saying, hey, these growth rates that justified premium multiples on traditional SaaS businesses, those may no longer hold. I think that is likely to be fairly universally true, because interfaces are going to move to be more agentic. And it's possible that a lot of the software that we use today is going to get relegated really to be data storage. So that is going to impact growth rates across the universe. Now, that said, there are some businesses that maybe sit on top of proprietary data. They're very deep in the stack. They're unlikely to get pulled out anytime soon. There may be regulatory nuance and moats to those businesses. If you take an example of Epic in the healthcare industry, that has a very, very strong incumbent position. And that company is innovating as it relates to AI. So those are some of the questions that we have to address, and those are some of the dimensions that we look at as we think about what may be durable versus, what really is likely to be in trouble.
And you're an investor in Anthropic, as you mentioned. They're having a fairly high-profile debate with the Department of Defense or Department of War, however you want to call it, over in the United States, about some really key and interesting questions about the ethics of AI, about mass surveillance domestically within the United States, about basically a human being having to be involved in issuing a kill order for military applications. Where do you fall on this debate? Where do you think sort of Anthropic should go with this? Should they capitulate, or is this something where the AI companies really need to hold the line?
Yeah, look, this isn't something, obviously, that we're in the middle of and can't comment. Anthropic and I believe the U.S. government are very focused on safety and alignment issues. I don't think there's a difference of opinion there. But there are going to be these questions that confront us all about the power of AI, what is appropriate, what is not. I don't have a specific comment on that particular discussion. I will just say that at Lightspeed, and I know Anthropic believes this, I think the U.S. government absolutely believes this, which is that safety and alignment is essential to the overall discussion around the use of AI.
Mm-hmm. And as an investor in Anthropic, there's obviously widely reported that we could get an IPO this year. Is that something that you would like to see? Do you think that this is the right time?
I think the choice of that really is down to the company. What we have to look at is all of these companies require significant capital to continue supporting the CapEx build out. That capital has been made available in the private markets. If anything, I think it has surprised everyone how the capital markets have been able to finance these businesses at the levels that they have. Mm-hmm. A point in time will come where all of these companies may need to tap the public markets. I think that would be part of the journey. We don't view that really as a milestone in any sense. It is really necessary on the step to continuing the path of innovation that they're on and resourcing themselves effectively to do that.
And talking of the path of the journey for AI more broadly, but also for India, you're obviously joining us now from India. What do you see the role of AI playing in the Indian economy and vice versa, India playing in the sort of AI ecosystem?
Yeah, well, look, India is the world's third largest digital economy. There are over 1 billion users of technology in this market. So from a demand side perspective, and I believe at least, with Anthropic, it is now the number 2 market for consumption. So this market can't be ignored. I think, though, India will be more of a demand side story. And the question now is, how will AI diffuse into the economy? And so what we expect to see here is a lot more application side businesses that are taking this incredible technology and driving it into the economy. And when you look at sectors like education or healthcare or agriculture, this could really be transformational for the economy. It's a very different lens than we're seeing and hearing in the West.
Well, thank you so much for your time today. Lightspeed partner Bejul Somaia joining us there from New Delhi at the AI Summit, really giving us his grand unifying theory of AI, which he reserves the right to amend within 90 days. Coming up, we'll have more from the New Delhi AI Summit. We'll speak with the president of Bank of America's International Business. That is at 6:40 a.m. London time, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories we're following this morning. French President Emmanuel Macron says closer economic ties with India can help protect against global uncertainty. After meeting with Prime Minister Narendra Modi in Mumbai, the leaders announced measures including an agreement to avoid double taxation. Macron's visit comes as India moves closer to buying 114 French fighter jets.
ये पार्टनरशिप केवल स्ट्रेटेजिक नहीं है.
This partnership is not only strategic, but in today's turbulent world, this is also a partnership for global stability and global progress.
And Reform UK's new Treasury spokesman, Robert Jenrick, is set to say the party plans to overhaul the Bank of England and the government's budget watchdog if it wins power. The BOE would be, quote, stripped of ancillary responsibilities such as net zero so that it can focus on keeping inflation down. Meanwhile, the Office for Budget Responsibility will be required to include more diversity of opinion when creating forecasts for the UK economy. And New York Mayor Zoran Mamdani is proposing to raise the city's property taxes for the first time in more than 2 decades to help fill a $5 billion budget gap. The proposed 9.5% property tax hike would take effect in the fiscal year that begins July the 1st. It would include all the city's property classes, affecting more than 3 million New Yorkers and more than 100,000 commercial units. The United States has renewed its threat to quit the International Energy Agency unless the organization scales back climate advocacy and focuses on energy security. The Paris-based agency has faced criticism in recent years for the publication of long-term forecasts, which include more active government policies shift away from fossil fuels. Well, coming up, Warren Buffett has slashed his stake in Amazon, but he's also been buying. We'll tell you the legacy brand he chose for his final bet as CEO. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Oliver Crook with your top stories. U.S. futures edge higher as the recent selling pressure tied to artificial intelligence stabilizes for now, and the U.K. inflation expected to fall this morning in a boost to the Bank of England. The United States and Iran make cautious progress in nuclear talks in Geneva. Tehran plans to return with a new proposal in 2 weeks' time. Plus, peace talks between Russia and Ukraine continue today after President Volodymyr Zelenskiy tasks his negotiators with discussing the future of its occupied Nuclear Power Plant. Let's get a check-in on the markets this morning as we head into the session here this Wednesday morning. You can see S&P futures up about 1/5% this morning. NASDAQ similarly up 0.25% going into this session after that sell-off we saw last week. And a little bit of hesitancy yesterday on the NASDAQ as well. And gold still broke below 5,000 this week. We're looking at 49.31 this morning, but up by 1% for the precious metal looking into this session today. Now let's get into some of your top front page news stories. The Financial Times is leading on Christine Lagarde's decision to leave the European Central Bank before the end of her 8-year term, giving Emmanuel Macron and Friedrich Merz a chance to pick her successor. The front page of the Telegraph leads with the UK Chancellor Rachel Reeves being accused of refusing to increase defense spending despite pressure from military chiefs. And the Wall Street Journal, the so-called woke AI feud escalates between the Pentagon and Anthropic, with claims that the Pentagon might ask contractors to certify they don't use Anthropic's Claude AI tool. And you can get a roundup of all of those stories and many others on today's edition of Daybreak Europe. Terminal subscribers go to DAYB Go. Well, Warren Buffett's Berkshire Hathaway has slashed its stake in Amazon while purchasing shares in the New York Times. For more on that, we're joined by Abir Abu Omar. Take us through what we've seen from these 13F filings and what it comes and what it means for the sort of Oracle of Omaha.
Yeah, Ollie, I mean, look, Warren Buffett has been selling Amazon. So Berkshire Hathaway has reduced its stake in Amazon by more than 75%. They now own about 2.3 million shares. That is a buying spree that they started in 2019. It's been reduced by quite a bit. So what Berkshire Hathaway has also done is that they bought a stake in New York Times, which was up 10% in the post-market yesterday. But three macro themes that I want to point out that Berkshire Hathaway has gone through, but also across the 13F filings is that we're seeing, and this is from last quarter, right? But we're seeing a rotation out of tech, out of discretionary, and into healthcare services. I was looking at the charts this morning, and I thought that the healthcare aspect was quite interesting. Seeing buying into AstraZeneca, a little bit of a different story when it comes to the Max 7, net selling when it comes to Alphabet and Meta. The other Max 7 stocks, we're seeing some buying in those.
And let's go into some of the specific names of who dumped what, who bought what. Get us a little bit of the details there.
Yeah, so Berkshire is one of those money managers that has sold more than 75% in Amazon. NYT is one of the stocks that it has bought, but it also trimmed its allocations in Apple and Bank of America. So the finance sector last year did pretty well. It's down this year, according to the bank's index. In the S&P, the Max 7 Bloomberg index was up quite a bit last year. It's down as well this year. So those are some of the elements that we're looking at when it comes to the single name stocks.
Well, Abir Abu Omar, thank you so much for that. The all-important F13 filings that we always watch very closely. Thank you this morning. And as we just mentioned, the Financial Times is reporting that Christine Lagarde is expected to leave the ECB before her 8-year term as president expires in October next year. The ECB responded, President Lagarde is totally focused on her mission and has not taken any decision regarding the end of her term. This is what President Lagarde told Bloomberg on a recent episode of Leaders with Francine Lacqua.
It was a challenge. It was Europe. I was always under the impression that it was a 5-year term, and I hadn't checked. So having said yes to Macron and Merkel, I said, oh, okay, well, I'll be in Frankfurt for 5 years. And at that point, Macron said, no, for 8 years. But it was too late.
Well, Bloomberg's ECB editor Jana Rondow joins us with us now for more. Jana, is she going to go? What are we expecting to see? This is builds on some of the reporting that Bloomberg has done in recent weeks.
Yeah, that's an excellent question, and I'm afraid I don't have a detailed answer. We've heard she said she's not a quitter. She, in the past, said she will continue to serve her term. But, of course, all this got kicked off last week when the governor of the Banque de France, François Villeroy de Galhau, announced that he would leave the institution, the Banque de France, in June to work for a charity, and it all had a bit of a flavor. And of course, that means French President Emmanuel Macron gets to pick his successor. And I think some of the same dynamic, the same speculation is underway. Of course, France has presidential elections next spring, the far right is riding high in the polls, and there is some concern of can we entrust the far right in France to have a say in picking the successor to Christine Lagarde. That is why we are having this discussion right now. If you read closely between the lines, of course, she says she hasn't thought about ending her term. It's not a denial, if you ask me. It also means she hasn't made up her mind. So until she does, until she either serves out her term, until the French elections happen, or until she resigns, this speculation is now going to be with us, and it'll be very interesting. And we, of course, will put in some calls in the course of the day.
Well, indeed, we'll look forward to the fruit of those calls. Thank you so much, Jana Randau, joining us this morning from Berlin. Let's get the perspective from Louise Dudley, Global Equities Portfolio Manager at Federated Hermes. We're going to talk about AI, we're going to talk about the United States, but I just want to get your sort of view on this potential move of ECB President Christine Lagarde leaving early. It is still all very managed. This is something that we're talking about sort of deep into the future, but does that change the picture for you at all in terms of thinking about Europe?
I don't think it does in the near term. I think, there's still a lot of speculation, and obviously what she's saying maybe doesn't hint that she will go. But, people will start to make the assumptions that it will be nearer term than the common expectation as it was. That said, what's going to happen, we think, is, always going to be data-led. We've seen that. We know the relative differential between ECB versus others in the world. So I think we expect it to continue to be stimulating. And we know that, Europe has its problems in terms of growth. But I think overall it will continue to be weaker. And I'd like to get your perspective on the sort of AI trade and how we sort of interpret it throughout the market. Obviously, this has been a topic of very active debate over the last couple of weeks, months, potentially years. In terms of, there was the CapEx debate. Now it's talking about wipeout across industries. How are you interpreting where we are right now on this AI conversation within the markets? Yeah, so I think it's really hard. I think, investors, outside investors, when they look at the market, there's obviously some big moves. That's because, the market is dominated by these large cap tech names who are obviously very ingrained with that AI trade. So therefore, maybe there is a lot of kind of risk off movement. But actually for us, where we're looking at the underlying fundamentals, even kind of next quarter through to the kind of next fiscal year, things are actually looking quite strong. There is actually positive momentum within that. So actually we're looking for opportunities within that. We're seeing things that, are not potentially being disrupted in the near term. Where are those opportunities in your perspective? So I think one of the key areas that we're focusing within software is cybersecurity. Actually, a lot of that kind of build out that they have, their kind of backlog is very secure. These companies are going to be only more in demand. So that's certainly an area that has sold off alongside the others. We know there's a lot of passive movement in these names. Those are the opportunities that we're seeing near term. Similarly, in Europe, I think there's because it has a long term kind of valuation. It's generally kind of cheaper than the US. It hasn't sold off quite as much, and we think there's also potential to rebound without so much sentiment within that. I want to drill down a little bit into the European call. Is this really a conviction by Europe trade, or is this a diversify away from the United States trade? Because I think that's the big debate that we're having here. And also, how large does the idea of German stimulus feature in your sort of base case for Europe? I think it is important. I think for us, we're not directly looking at names which are maybe directly going to receive funding, like the defence names. So for us, we tend to skew away from those names. But the more infrastructure build out and the general sentiment behind those European names, I think, is being driven by Germany. And I think, we obviously had a strong start to Germany in the start of last year. We expect to see some of that come through middle of this year as well. And thinking also about the Federal Reserve, some of the data that we got last week from the labor market, also from inflation, but now also hearing from a number of Fed speakers saying that actually it's not just a question of AI being inflationary, but it's also productivity gains will mean a higher neutral rate. How do you sort of read through the sort of AI story with the rate story within the United States? Yeah, so I think it's about looking at those bottom-up stories. So the individual companies talking about the productivity gains, what they're spending, what they're expecting for return on investment for for some of those. And I think we are starting to see some numbers against it. And I think, maybe they're underselling it. There's not much incentive for them to kind of oversell how much they're going to be able to benefit from it. I think also it's about those marginal gains that I think may come quicker for a lot of companies as really people start to embrace these technologies more and more across the business suite.
And we're about 20 minutes away from the UK CPI print, which obviously we'll be watching very, very closely. Obviously, that will bear on what the Bank of England does this year. Where does the UK sort of emerge in your sort of thesis looking at 2026 in investment?
So I think actually the UK we're seeing is relatively more attractive than the rest of Europe, actually. Part of, and again, that's a stock-specific call rather than an individual kind of overall kind of market macro call. But we definitely see some strong names within the UK. And those are names that don't necessarily have that much of a UK footprint, but, are benefiting from broader growth. And I think particularly growth into Asia as well, which we also continue to see as rebounding a little bit compared to last year as well.
We'll have to get into that Asia call a little bit later on at another time. Thank you so much, Louise Dudley, Global Equities Portfolio Manager at Federated Hermes. Thank you so much for joining us this morning. Coming up, Bank of America's President for International joins us from New Delhi as the global leaders gather for a high-profile AI summit. We're not going to get away from the AI conversation quite yet. We'll speak to him next, and this is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Wall Street has experienced a volatile session as traders struggle to assess the outlook for artificial intelligence, the big theme for the last couple of weeks. It comes as over a dozen global leaders and key tech players attend a high-profile AI summit in New Delhi, hosted by India's Prime Minister. Joining me now from the summit is Bank of America President of International, Bernard Mensah. Bernard, thank you so much for talking to us this morning at this very sort of timely moment for the sort of AI summit. How hard is it for you to build a sort of executional AI narrative, given the sort of changes that we're getting every kind of week in terms of what the markets are focusing on?
Oliver, thanks. Great to be with you. It's what it is. It's an area that's moving and evolving fast. And sometimes I think about it like a watch, minutes hand, second hand, hour hand. And you need to sort of calibrate to all of that. I'm focused on the minute and the hour hand, and just making sure that we're anticipating where we think that the puck is headed with respect to AI.
And thinking about that minute, second hand, we've been talking about the SaaSpocalypse, the Ramageddon. Where do you see kind of the biggest dislocations within the sort of different industries? Again, it seems almost every single day we get a new story on this. I mean, here in Europe, we keep hearing from investors that Europe is sort of a hedge against some of the top-tier AI trades. But again, some of the industrial companies getting hammered this week in the form of Dassault and Siemens.
Yeah, I think that analogy perhaps pertains, i.e., a lot of that is the second hand, and I'm not saying we should ignore it because it reflects, perhaps the medium-term trends around these things. But whipsawing from sector to sector, day to day, is a tough thing to follow. I think most really active market participants are thinking more in the sort of medium term as to how might these things, deploy meaningfully. I think we're all on that learning curve, and that discovery is taking place. It's taking place live in the markets, and that's where we're seeing some of that price action.
And taking it from the second to minute hand to the hour hand, where do you lie on this idea of the sort of CapEx debate for many of these companies? I think it's $650 billion we're talking about this year. Is that overdoing it, or do you think that's an appropriate figure for the sort of potential that this technology has?
It is a lot of money. I remember many years ago when the oil sector were the big capex guys. They said spending a billion or two a week, more than a billion a week was a lot of capex, which is 52 billion a year, and we're through that. I think that those rails and that infrastructure will happen. I think back a little bit to the early days of .com. I think the question is, where are the returns? Who reaps the benefit of it? We're relying today on an accumulation of that capex and that infrastructure that started getting rolled out in 98, 99, 2000. Internet rails, digital, mobile, 3G, 4G, 5G, cloud. and we've built on that to the technology that we have today. Should it cost 400 billion rather than 650? Will the value be 500 or 700 in 3 or 4 years' time? It'll depend, I think, on the rollout and the returns we get and the efficacy and the general adoption in enterprise and in retail. So the jury's out there.
Yeah, and so we've talked a little bit about the trickle through of the AI effect on these massive tech companies and other industries. I'd like to get your appraisal about its sort of impact on inflation, on the more macro economy. We have a debate now, it seems, at the Federal Reserve emerging that basically the productivity gains from AI will mean a higher neutral rate in the United States going forward. Do you take a view on that? Is it too hard to say basically what the impact on actual central banking and rates is going to be?
It's even tougher than the earlier question. I think there's a broader debate around the neutral rate and that 2% rate, which has been sort of set in stone a little bit, and there are better academics out there that might suggest that maybe that's something that should be revisited over time, and what's that sort of non-inflationary rate that we should look at. But certainly one of the, not the only, is it 30, 40, I wouldn't say it's more than 50%, but one of the impacts on that is the adoption of this technology. There'll be inflationary aspects, but then also there'll be productivity gain aspects, and you could argue that they come out over, perhaps is the time horizon that we might be looking at again, maybe more immediately slightly inflation in some areas, but over the medium term, continued perhaps slightly deflationary.
And let's imagine a world in which you're very concerned about the sort of AI reaper coming through a bunch of different industries. You're also concerned about the CapEx spend. Where do you step out of the AI trade? How do you hedge? We've also seen some wild moves in some of the traditional hedges like gold. Where is a safe place right now if you want to step out of the AI story?
Gosh, I mean, it's like the internet it is such a horizontal technology. It's interesting that we're in India. My mind went a little bit to sort of emerging markets, but I would say the fact that we're in India for the business that we Bank of America do here, which is an important and a growth market for us. And one of the reasons that we hosted this event today was to really see the impact of AI on some of the emerging economies. But I would say that one of the interesting areas would just be look more broadly around the globe where AI adoption perhaps might be more embraced, because just the fundamental benefits around job creation and inclusion are not as high perhaps as some of the concerns in other parts of the world around job destruction, as it were, or possibilities of that, which I think are probably a little bit overdone.
Yeah, I'd like to drill down a little bit on your perspective, particularly on India. You say you have a very large business there. You're obviously on the ground. Talk to me about how the AI ecosystem is going to affect India and the place that India is going to play in that ecosystem.
Yeah, it's exciting to be here. As I said, we're very positive about it. It's great that the Prime Minister's got his event going. I think India is incredibly well placed. I always say the most valuable talent that India has is its human talent. And India has been growing that at pace. One of the interesting things is India has this, digital public good infrastructure that it put in place with its UPI system, its Aadhaar system. So it's got great rails on which the population can engage digitally with digital ID, with bank accounts, with universal and common applications for digital commerce. And so I think that's a good base level with which to accelerate its AI adoption, plus just the underlying quality and the growing quality of the sort of the STEM and tech graduates coming out of India. And then India has incredible global businesses that will, like any other business, need to adapt to AI. So I think it's very well positioned. It needs to build its own infrastructure, and I think there's opportunities around that for those people in this space. So for us, whether it's the human talent, whether it's really traveling here with our global clients and actually helping our Indian clients take advantage of this space, it's an exciting time.
Well, Bank of America International President Bernard Mensah, thank you so much for your time joining us this morning from New Delhi. Let's get to some of the corporate news we're watching this morning. Meta has agreed to deploy millions of NVIDIA processors over the next few years. The rollout will include products based on NVIDIA's current generation of Blackwell chips and the forthcoming Vera Rubin AI accelerators. Meta also says it plans to rely on NVIDIA's Grace CPUs for the first time. The pace reaffirms Meta's loyalty to NVIDIA at a time when the AI landscape is, as we've been talking about, ever shifting. Bayer has agreed to pay more than $7 billion as part of a major push to resolve current and future cancer lawsuits over its top-selling Roundup weed killer. The settlement plan aims to turn the page on litigation that has ensnared the company for many years. The German conglomerate proposed a $7.25 billion class action settlement to resolve Roundup's suit that has been filed and potential claims that could file over a 21-year period. Bayer shares rose on the news. Plenty more coming up. This is Bloomberg. Well, let's catch you up on some of the things we are looking at further out in this morning. We are 5 minutes away from UK inflation data that will be crossing at 7 a.m. UK time with Glencore earnings as well. And, of course, we'll be following a little bit later at 7 p.m. The Fed minute. So let's set you up for that inflation print that we're going to be getting out of the UK today. As you can see, the estimate for December is going to be at 3%, coming down from that 3.4%, I should say January, coming down from that 3.4% back in December. Core is going to stay there at 3%, coming down from that 3.2%. But where there's going to be a lot of concern and a lot of conversation is around this question of services PMI, or CPI. As you can see, still broadly elevated. Will be coming down to 4.3% according to the estimates, but still something that is going to be very concerning for policymakers and the markets looking ahead at what the Bank of England is going to do. And if we do drill a little bit deeper into those services expectations from the Bank of England, you can take it out a little bit further out. As you can see, we've had inflation coming down in the United Kingdom, though surging a bit back up. You can see that persistent services inflation still there above the trend line for the rest of CPI. And of course, looking forward at the Federal Reserve minutes a little bit later today, we have a much broader conversation about the different effects that AI is going to have, not just on inflation, but also potentially on the neutral rate within the United States. That actually higher productivity rates in the United States may mean a higher neutral rate. You can see there the 2-year yield has basically been stuck to the ground. However, when you look at the Fed speak that we've been seeing, a much more hawkish tilt in some of the vocabulary. You can see that right there. That is what we're watching this morning. Again, we are about 3 minutes away from that inflation data out of the United Kingdom. The opening trade is up next, and this is Bloomberg.